Hey guys, Sean Pruitt here, president of Kingdom Exploration. So I've heard it so many times, and I'm not anti-Trump. Okay, I think he's our best option. This is not a bashing of Trump, but Trump cannot save the oil and gas industry. And everyone says, "Well, Sean, oil prices were at an all-time high. OPEC in Saudi Arabia, they were bowing down to Trump." Well, that is true. During his time in office from 2017 to 2021, oil prices were low, but for good reason. Okay, let me look at some statistics here. So if you look at, this is demand for crude oil worldwide from 2004 to 2023. Under the Trump administration, in 2017, our oil demand was 97.67 million barrels of oil. 2018 was 99 million. And 2019 was 100 million barrel a day demand. But then 2020, we hit 91 million barrel a day demand. And then in 2021, we hit 97 million. Okay. So the key is here in 2020, our demand was 91 million barrels a day. That was during COVID. That's when everyone stopped driving. Life shut down. Okay. Now, if we look at U.S. oil production, okay, this is all the months that Trump was in office. We went from producing almost 8.9 million barrels a day, and we grew to a record output of 13.1 million barrels a day. In 2020, we were producing more oil than any country's ever produced in one day in history, and our demand in 2020 was 91 million. We lost almost 10 million barrel a day demand in a short period of time, and U.S. shale output was at a record production. Okay, here's what you have to understand. Today, our demand is roughly 104 million barrel a day demand, 14 million more than it was then, and shale oil is on the decline. From 2012 all the way to 2020, we fired up the printing presses, the U.S. fiat currency, we printed money, we drill, baby, drill, and we produced assets faster than any country in history has been able to do. Now we are producing tier 2 assets. We threw away our oil. We burned it. We sold it for nothing. And now our natural gas, we're just throwing it away. We're giving it away for free. Okay. And we are raping our assets faster than you can believe. And the bureaucracy is that green energy is replacing oil, and we have plenty of oil. There's plenty of oil on the sidelines because of OPEC. Here's the deal. It's all BS. We are not investing for tomorrow's oil demand. Oil continues to grow despite what the EIA is telling you, despite what the left is telling you. Of course, they're going to tell you, hey, oil demand's dropping. And our that thing that got us voted in an office, hey, it's not working, guys. No, they're not going to say that. They're going to tell you it's working all the way to out the door. Okay, and they're going to deny all the statistics. I mean, the Energy Information Administration is financed by the left. Okay, it's lies. Okay, and so there was a recent interview with Jeff Curry. For 37 years, Jeff Curry was the commodity expert for Goldman Sachs, okay? And the Energy Aspects recently, yesterday, I believe, interviewed him. And the question was, are you still bullish on oil? And he was, hell yes. He is very bullish on oil, but he was comparing it to copper. Copper has a lot of things in play that's causing people to be very bullish on copper, and they're very long on copper, and they believe that copper prices is going up, okay, because of electricity demand, because of green energy demand, and so on and so forth. We said oil has a better story than copper, but everyone's buying copper. Why aren't they buying oil? Well, because people that have invested in oil got beat up. I'm talking about on the stock side. I'm not talking about on the ground floor side where I am. I'm talking about on the stock side. If you invested in oil, you were beat up because you've got the people that control 60% of Brent crude, which is the ICE, the Intercontinental Exchange, which is Europe. And then you have the NYMEX, who controls Brent crude, which is the other 20%. 80% of the world's oil is priced on two exchanges, the European exchange and the New York NYMEX. And those are Western ideologies, and they are governed by ESG. It's very woke. It's very, and at the end of the day, oil prices can erode trillions of dollars of value for every company in the world. So what does the largest companies in the world that have control over oil prices do? They sell it before it has the ability to climb to a certain level. So what does that do? Down the road, all you're doing is reducing the ability for oil companies to be prosperous, because everything else, the eggs, bread, milk, everything else because of inflation has gone up tremendously, but oil prices haven't. Oil prices at today's prices are like $50 under Trump. Oil prices are very low if you include inflation. I mean, imagine if a restaurant, if they're paying more money because transportation prices are increasing, wages are increasing, food prices are increasing, everything is increasing. But if they kept their food prices the same, they'd go out of business. Well, oil, same thing. I mean, material costs are much higher. The cost to drill is much higher. The administration shoves a bunch of fees and a bunch of hoops that they have to jump through, making things more expensive. Okay, Shell was already not profitable. It's only profitable on the stock exchange because of the multiplier. But if you invested directly in Shell oil and gas, you would lose money, because Shell is the last ditch effort. It's the last remaining major asset in the U.S. to produce. It's the source rock. It's where all oil and gas comes from. But they weren't able to tap into it years ago because of fracking technology. They can hit it now, but it's very expensive. It wasn't profitable when oil prices were over $100 a barrel. It's not profitable today. It only looks good on the stock market because of the multipliers. But at the end of the day, if it's based upon how much money you put in and how much oil comes out, you lose. Okay. Now, conventional oil and gas, it's still profitable at $70 oil, because if you can drill for really inexpensively, it's highly profitable. Okay, and it's 100% tax deductible. It's a great situation. So back to what I was saying, Trump can't save us. Oil demand continues to grow despite what the EIA, despite what other people are saying. I mean, EIA will admit that we're at our oil demand is at an all-time high, but what they won't tell you is that oil will continue to grow. Goldman Sachs says we'll be at 108 million barrel a day demand by 2025. OPEC group is saying 107. And so oil demand continues to grow. It's the cheapest energy out there. It's cheaper than green energy. And oil prices really should be much higher. But because of politics, because of ESG, the woke agenda, because of controls and whatnot, I mean, if oil was not traded on the NYMEX and it was not traded on the ICE, oil prices would be at $130 a barrel, $150 a barrel, but it's not, okay? And so what that is doing, it's putting pressure on the Middle East, is putting pressure on shell companies not to be profitable, okay? And if Trump comes in office, yeah, he could put pressure on OPEC to produce more oil. He could end wars, but it still doesn't fix our oil and gas supply issue, okay? At the end of the day, Trump was in a negotiating position because oil demand wasn't that high, and we were producing more oil than we've ever produced before. Well, Shell's on the decline. Oil demand is at the highest it's ever been, and the Middle East has shifted with the Afghanistan debacle, with Iran being empowered, with Iran having nuclear weapons, with Russia being at war with Ukraine. Russia right now is sending, from what I understand, is sending nuclear arms over to Cuba. We're going to have another Cuban Missile Crisis. I'm sure Biden will drop his pants for that one. And so he's doing Biden's doing whatever he can to prevent this mess that he's made with the Middle East, with energy, with prices and whatnot. But at some point, this manipulation, this control on commodity prices, which is being manipulated, at some point, something's got to give. Something's got to break. The shell companies going out of business, the Middle East getting angry enough to cut us off from oil. Something's got to shift. I'm telling you, you can't continue to force a price of a barrel of crude to be at a certain level when supply and demand fundamental says it should be something else. And Jeff Curry, I recommend going to the energyaspects.com Jeff Curry podcast. Listen to what he says. It's very long, very detailed, but he's very intelligent. He has a very strong worldview. He has 37 years of commodity trading, and he says he's as bullish as ever with oil than ever. But I'm excited about this because what I do is I develop in conventional oil plays, and we're at the sweet spot. we are very profitable at $60 to $100 oil, which we're going to be bouncing around until something breaks. Okay, then it has the potential to go to if BRICS gets their way, they're going to take their oil and trade it amongst themselves within their own currencies, and then it'll allow them to control 40% of the world's oil supply, and they could control the price of that oil and say, hey, listen, I know Brent crude says $80 a barrel, but we're selling it to you for $100. They could do that if they get organized, and they are. It's coming. And if that happens, oil prices will go up. It's guaranteed to go up. All right, guys, I'm Sean Pruitt, president of Kingdom Exploration. If you like this channel, please subscribe. And again, the algorithm hates what I have to say, so please share, like, and subscribe. Thanks, guys.